Good morning. My name is Naneje Opokwajuman, CEO of Blackstar Brokerage. I welcome you to the head office of Blackstar Group. This is day 2 of the 2023 edition of the Blackstar Investor Webinar Series. As has been the protocol, there are a lot of people still logging in from the waiting room. So we will request that we allow another 10 minutes for most of the participants to settle in, then we'll take off. So please allow us the next 10 minutes. All our speakers and resource persons are available. So please stay tight and we'll come back at 10 a.m. Thank you. Good morning once again. Thanks for sticking by, and we are ready to go. I welcome you once again to the head office of Black Star Group. This is the 2023 edition of the Black Star Investor Webinar Series. And this year is more of the reflective version because of what we are all going through as a market and an economy. So we are reflecting on stakeholder gaps and how to build back and stronger for the many years ahead of us. And this is day 2. Yesterday, we hosted the capital market group, and today we are hosting the banking group. Today, we are graced with a lot of experts for today's section, and we will have representation from the Banking Association. We will have representation from the professional body group of ACI. We also have representation from the BOG, and we also have another international representation. Our guest of honor today is Mr. Steve Opata, who is an advisor to the governor of Bank of Ghana. Also during the session, we will have a high-powered representation of the governor himself, who will be represented by Dr. Bernard Wali. The moderators for the day are now Louisa Nelson and George Boafo, all of Black Star Group. So this is how today's session will go. We will take the keynotes from the guest of honor. Thereafter, our moderators for the day will come in and they will take over the discussion. It will be interactive. We'll give you the opportunity to give your comments and questions in the Q&A session. So, ladies and gentlemen, without taking much of the time, I would like to introduce Mr. Steve Opata. Mr. Opata, good morning. If you can hear me, we would like to hear your keyword for today's session.
Good morning, and thank you very much, Nanaje, and thank you for the opportunity and to participants in this seminar. I'm just going to provide some brief opening remarks, and unfortunately, I will not be able to stay for other interactive sessions, but I'm happy that there's good representation from the Bank of Ghana to do that. So, ladies and gentlemen, it's my utmost pleasure to join you on this investor webinar series to reflect on the theme, stakeholder gaps and rebuilding investor confidence post DDEP. That's a domestic debt restructuring exercise. The theme is highly relevant to the national economic discourse, given the sizable shocks that has hit the Ghanaian economy, and more especially the financial sector in which we all operate. I'll proceed briefly by discussing the current state of the economy and the policy mix that we have in place to restore macroeconomic stability, and then offer some concluding thoughts. As you are all aware, on May 17, 2023, the Executive Board of the IMF approved a $3 billion 36-month arrangement under the Extended Credit Facility, that's the ECF. The IMF ECF really hinges on the government of Ghana's post-COVID-19 program for economic growth, what the government has referred to as a PCPEG. Really, the main objective of this program is to restore macroeconomic stability and debt sustainability, and it includes wide-ranging reforms to build resilience and lay the foundation for stronger and more inclusive economic growth, rebuild external buffers, and restore price stability. So this is the program that Ghana has been pursuing since May. Actually, the staff level agreement was signed in December last year. I'm happy to note that we are beginning to see the impact of this program. First of all, as I mentioned, it is to restore macroeconomic stability and lead to growth that is inclusive for everyone. First point I'd like to make is that the country's external sector position, judged by the first half of the year, has improved significantly, supported by a current account surplus that reflects higher gold receipts, import compression a little bit, and lower investment income payments from lower interest on external debt. So the key point I make here is that we are beginning to see our external buffers rebuild. So as a result of this, the Bank of Ghana built up almost close to $1 billion in foreign reserves as at the end of July. This is coming mainly from our gold purchase program and the settlement of some short-term liabilities. In fact, the outlook for reserve accumulation in the second half is good, and we expect this to be supported by inflows from cocoa syndication and support from multilateral sources, especially the World Bank and IMF. In the mix of all of this, because our buffers are beginning to rebuild and improve, we've seen a more stable cedi in recent times, and that is supportive of our effort to bring down inflation. Now, touching on inflation, the pace of disinflation that we saw earlier on has slowed in the last 2 months. This is as a result of higher food prices, despite the decline in non-food inflation. Inflation currently is at 42% and is higher than our medium-term target and end-of-year target. In order to bring inflation to the target and re-anchor inflation expectations, as I'm sure you are all aware, the Bank of Ghana's MPC at its last sitting raised the policy rate to 30%. This is to complement ongoing fiscal consolidation to ensure inflation begins to decline towards the end of year target. Ladies and gentlemen, in line with the targets set under the IMF ECF program, financing of the budget by the Bank of Ghana is expected to be zero. That is no Bank of Ghana finance of the budget. And so far, this has been adhered to. As you probably have noted from the mid-year budget read by the Honorable Minister of Finance, Ken Ofori-Atta, he re-emphasized government's commitment to meeting the targets under the IMF program, with fiscal performance for the first half of the year so far broadly in line with target and in line with the program's expectations. Therefore, this fiscal consolidation path that's envisaged under the program, alongside the tight monetary policy stance, will help bring inflation back to target. As a matter of fact, if you look at the program, the target of the medium to long-term target of 8 plus or minus 2%, in our view or our projections, is not attainable till 2025. However, our strategy is to have a phased approach to bringing inflation back to this path. So the outlook is that we see inflation declining on that path for 2023, 2024, and in 2025, getting back to our medium-term target of 8 plus or minus 2%. On the banking sector, the first half performance for 2023 shows a considerable growth in profits, following significant losses posted in 2022 on account of the DDEP. If this trend continues, we expect banks to rebuild capital buffers quickly, in addition to equity capital injections by their shareholders, to give a further boost to real sector growth and to rebuild resilience of the banking sector. Ladies and gentlemen, early operationalization of the Ghana Financial Stability Fund should also help provide additional recapitalization support for eligible banks in line with the criteria and governance framework that's been agreed with the IMF and the World Bank. So in terms of, in concluding this, I just want to reiterate the following. In terms of policies to support the financial sector, the Ghana Financial Stability Fund should help provide additional recapitalization support for eligible banks in line with the guidelines with the IMF and the World Bank. And this we expect to rebuild some resilience to support economic activity. The Bank of Ghana's domestic gold purchase program is also expected to continue to improve on FX reserves. This, in addition to a supportive monetary policy stance and the envisaged fiscal consolidation under the ECF program, should support a more stable cedi in the near to medium term. I must indicate that we still see some challenges with a subdued outlook for real sector activity, but it is envisaged that growth will rebound in the medium term after the policy reforms that are being implemented begin to be more impactful. So in terms of the financial markets development, it's kind of very imperative that over the medium term, we'll rebuild confidence to both retail and institutional investors in the Ghanaian financial system. And that's where I find this this seminar very important, of assembling key investors to deliberate on the reforms that are taking place and how we see the outlook going forward. I think a very important part of this is also to bring along literacy, financial literacy, especially for the retail investors, that the reforms that we've seen, especially the domestic debt exchange, in the medium to long term should create a platform of growth or debt on a sustainable path. So if you look at it in terms of as a reform measure, then in the medium to long term, we expect debt to be more sustainable so that investors holding in domestic assets will be more sustainable. So I urge all of you to be part of these efforts to provide the financial literacy, especially on the retail front, that the domestic debt exchange was a necessary evil that needed to take place to bring Ghana's domestic debt on a sustainable path, and therefore we should all support that. I think you are all aware that we also trying to finish the domestic debt restructuring for other segments, such as the dollar bond that was just implemented, cocoa board, and also pension sector. And we urge all of you to continue to support this. On that note, I want to thank you for the opportunity to deliver these brief remarks, and I look forward, or I urge all of you to discuss these issues to bring some kind of momentum into the reforms that we seek to do. Thank you. So Nana, I'm done. Thank you.
Thank you very much, Mr. Steve Opata. My name is George Adebuafo, and good morning, ladies and gentlemen. With me here to moderate for today's program is
Na Louisa Nelson.
Thank you, Na. So next that we have is Dr. Wale, who is actually representing Dr. Ernest Addison himself, the governor of the Bank of Ghana. So without much ado, let's hear Dr. Wale. Hello, Dr. Wale. Dr. Wale, if you can hear us. So whilst you're waiting briefly for Dr. Wale to connect, I think I'll give you a run-up of what we are expected to have for today. So as a way of a program lineup, we have these topics to discuss. Implemented initiatives to revitalize the Ghana fixed income market. And we would have also a gap analysis of the financial market and proposed regulatory interventions.
Sure, and we also have the lessons learned and policies recommendations for restoring of confidence in the financial markets. And then finally, we would have assessing the effectiveness of debt restructuring and its impact on the financial sector.
All right, so we understand that you would have comments, you would have questions. We entreat you to type it in the chat box, and we would address all that sometimes in the course of the session and mostly at the end of the program. Is Dr. Wale connected now? Okay, so we noticed that Dr. Wale is having a little challenge with his system. So we would move on to the next on our list. And to give you just a little background on the Ghana fixed income market. So before 2020, we know the Ghana fixed income market was booming. The rates were very good. Foreign investors invested in our local bonds. Local investors did same. Pension funds, banks, asset managers, individuals with high net worth were all on it. So business was really good. And then we had COVID-19 hits globally. And then there were slowdowns in most economies. We had the lockdowns and less economic activity. Fitch also revised Ghana's outlook from stable to negative. This impacted on our economy. We saw exits of the foreign investors selling off their bonds and moving out into other global assets. Equally, our local investors also moved out. The yields also and the spreads widened. And then eventually we had a shutdown of new bonds. In 2022, we had conversations on GDEP and then further slowdown in market activity generally. So now the conversation is that going forward, what do we do? How do we need and what do we need to do to resuscitate the Ghana fixed income market? So first topic to discuss would be implemented initiatives to revitalize the Ghana fixed income market. And to handle this for us is Mr. Augustine Simons. For the next 20 minutes, who will do justice to this. Mr. Augustine Simons, the managing director of the Ghana fixed income market, and was also the former head of information technology of the Ghana Stock Exchange. He has over 17 years of working history, working in investment banking space, and he continues to spearhead various strategic initiatives in the capital markets of Ghana. Ladies and gentlemen, let's invite Mr. Augustine Simons to handle this topic for us, implemented initiatives to revitalize the Ghana fixed income market. Mr. Augustine Simons, if you are ready, we are ready for you.
George, thank you so much. Just a little correction. I'm the head of the Ghana Fixed Income Market. The market is the department of the Ghana Stock Exchange. That's it. So, yeah, George, thank you so much and thank you for the opportunity given me to be part of this discussion. Very important discussion when we look at the rebuilding our markets after the debt exchange program. It's becoming very pertinent that we put in a program to ensure that we have the market back to the pre-DD situation that we have. Just a little history about the markets. This was a market that was established in 2015 with collaboration with a stakeholder in the financial sector. This including Ministry of Finance, Bank of Ghana, Central Securities Depository, the Association of Bankers Association, and Ghana Securities Industry Association, as well as the ACI group. And so we have all the collaboration of all these key stakeholders coming together to really establish this important market for the country. With objectives to ensure that there's greater efficiency in trading of securities on the market, especially on the secondary market. That will also result into better price discovery on the market, greater transparency when it comes to secondary trading of securities, and also to ensure that we are able to bring secondary trading of securities to international standards. And indeed, when the market was established and under the regulation of the Securities and Exchange Commission, we see that all of these objectives were achieved. And so the Ghana fixed income market became the envy of the continent, and we had various visits from other countries coming to learn from us. And indeed, the market was really growing and was doing so well. Now, having said that, let me talk about what has now happened to the market. We had George listing a few of the impact on the market after the debt exchange program happened. You rightly see that interest rate was soaring up and becoming very difficult to deal on the market after the domestic debt exchange program. We will say that the market was hit very hard. I'll just give you some statistics to show how the market how this has really impacted on the market. We see a lot of uncertainty on the market. Then we may also have to talk about regulatory policies that are not in sync, that is really affecting the markets. Know whether, George, do I have the opportunity to share my screen so that I'll show this this slide to the participants?
Yes, you can share your screen.
Can you see my screen, please?
Yes, we can see your screen.
Good. So we see the way the market had grown over the period from 2015 up to 2022, we've seen that how the market has really grown over the period. As at the end of 2022, the market had done almost about 700 billion cedis in terms of trading on the Ghana fixed income market. As at the early part of the year in 2022, when there were some hints about the market or government possibly going into do data exchange program. Even the first half was showing very positive, and we're doing around the first half of the year, we're doing around 148 billion Ghana cedis. So it was expected that by the end of the year would have hit about 300 billion. And so there was so much positive outlook for the market, and the market was really growing.
Hi, Mr. Simon.
Hello.
Yes, do you mind, this is Naluisa, do you mind putting it in presentation mode?
Okay. I did. It's better?
Thank you very much. Yes, yes.
Good. Right. So this is the slide that I wanted to show to the representatives. So there was so much positive outlook for the market, and we're expecting to hit around 300 billion at the close of the year 2022. But what has happened since then? From January to date, we see just around 35 billion that has been traded, compared to last year around the end of July, when we have done about 148 billion already. And so we see clearly that there's so much, the market has been hit so hard, that market is almost like gone. And so there's a need to really look at what can we do to bring out the market to the levels that we had done before the We've put in place a few initiatives that we're working so hard to ensure that the market come back to its levels that that before the DD. Because of the uncertainty on the market, we've done a lot of engagement with market participants, market operators, especially with respect to the pricing of the securities on the market. So we have a series of engagements with the dealing institutions, with the pension funds, and continue to talk about this, the way we will work hard together to bring the rates down. So there should be a deliberate effort to engage all of us to bring our hands to the table, to work hard to bring the rates down to the level even below 10%. We're seeing the short end of the market really at the current rate that it is. We will see that it's very difficult for the government to come to the market to issue long-term bonds if we do not really work hard to bring the rates down. When the short end is around 20 plus, looking at the current the DD bonds around 10%. So we need to work hard to bring this to the level below the 10% rate, so that it will create a space for the government to really come onto the primary market and issue long-term issuance to finance it, to finance government operations. We know for sure that the government cannot continue to use the short term to finance long-term projects if it wants to, and so this should be done. We're working hard to have a scheduled meeting of the key stakeholders, Bank of Ghana, together with the Minister of Finance, the pension funds, and then the dealing institutions, to sit in a room and then talk about what can we do to ensure that the rates will come down to the level that to promote dealings on the market, to see that the banks are now had a free hand to do. We know for now most of the banks do not have any assets in their trading books, And therefore, if we do not work on this, we will never be able to achieve the bringing back the market. Again, we also see the need for us to diversify products on the market. And so what have we done so far? Last year, November, we launched the green bond market. This is to enable institutions and corporate institutions come onto the market to issue green bond securities on the market. We're also working hard with to have a commercial paper market. We've done the framework and submitted to the SEC, and we're hoping that this market will be launched in the third quarter of the year. And this will give corporate institutions the opportunity to come to the market to issue these corporate bills to be able to finance their inventory and their payroll and all of that. And we see a lot of uptake on this. We've seen a lot of interest in this, and many some institutions have already started knocking at the doors of GIFM to start to talk about issuance of commercial paper on the market. In addition to all of this, improving the diversity of this assets on the asset classes on the market, the SEC together with the stock exchange has engaged a consultant who is currently working on various rules to back such instruments like asset-backed securities, securities lending and borrowing, margin trading, market making, and underwriting on the market. All of these, if we are able to face this instrument out on the market and bring these instruments onto the market, we would achieve that diversity so that investors who come onto the market have various assets to be able to invest in, and this will help to improve activities on the market. Again, we also are working so hard with the Minister of Finance, the Debts Division, to ensure that they give out much more information onto the market. We know that market thrives on a lot of information. We know the government is doing a bit to clear all its obligation in terms of coupon payments and maturity payments and so forth. So going forward, we want to work with them to bring all that information out onto the market so that the market will be widely informed about effort that is being done to ensure that we live up to, government live up to its expectation and obligation on the market. So these are a few initiatives that we're working hard to ensure that we recreate the market, we revitalize the activities on the market to ensure that the market come back to its level. Thank you so much for the opportunity to participate in this webinar. Thank you.
Thank you, Mr. Simmons. So 3 things from your presentation. So 3 initiatives: regulatory policy in sync, new market products and rules, and then constant market engagement. Is that what we got right?
Sure, that's true.
Great. So I have a question here for you. So with Treasury bill rates still higher and more attractive, can the new products compete with it?
So what we are doing, like we having a lot of engagement with fund holders. We're talking about working hard to have a deliberate actions undertaken to help rebuild up the market. Deliberate in the sense that we anticipate that when we have strong entities coming onto the market, strong corporate entities coming onto the market, the fund holders will look at their performance and look at it and probably do something even below what the government is doing. So with a sense that, for instance, if you look at the commercial paper that we want to launch, we requiring rating of the entities that are coming onto the market to issue, and we're looking for investment grade rating, so that we have a third party assessment of the issuer that is coming onto the market. And we hope that if the entities have a good rating, then asset fund holders may look at them and price them at a competitive rate.
Sure. That's quite interesting. You mentioned that companies will be able to do government minors, because government treasury bills have always been the benchmark. And currently it looks like the 14-day Bank of Ghana bill looks like the benchmark because it's very close to monetary policy. So how do you think companies will be able to issue below government in terms of cost? And is this a conversation people are having right now?
Yes, this is a conversation we want to, indeed, that is why we want to have a conversation with the pension funds, with the Ministry of Finance themselves, Bank of Ghana. We want to sit and talk about this issue, because if this is not handled and treated, it will be even difficult for the government itself to also to really come onto the market to issue long-term funding. So it's a conversation that we should have a discussion on it. And I mentioned that we should have a deliberate action taken, and deliberate in the sense that we need to deliberately bring down the interest rates to a level that it should be sustainable. If we're talking about sustainable debt levels, then we would want to look at the current treasury bill rates as really unsustainable. And so that we need to, as a country, we need to work on this and bring down the interest rate. So there should be that policy, regulatory policy saying where probably the MPR will have to be taking a good look at what the Bank of Ghana is issuing, and will have to be taking a look at. Again, Bank of Ghana comes onto the market, we may have to have a conversation about it. If Bank of Ghana is come to the market before Government of Ghana comes to the market, and indeed, if like you rightly said, the 14-day bills is close to the MPR rate, then what do you expect investors to price the government treasury bills? Definitely, it will be that close to that level. So there should be a deliberate conversation about this, and we work hard, sync the policies to ensure that the rates would trend downwards.
Thank you, Mr. Simons. So that's interesting to note that there is a conscious effort to engage the Ministry of Finance, Bank of Ghana, in discussing how best they would reduce rates. I have a question for you in the chat, and it goes that in the spirit of diversification, where lies the fate of the other deposit-taking institutions like the rural banks and the savings and loans? They are only allowed to invest in Government of Ghana and fixed deposits. Is that correct, please?
Okay, so that would be a decision for such institutions to also take. If indeed the market brings about these products, they are really and these products are really functioning so well on the market. We hope that they will also behave like rational investors who would see if these will give me a better return and a safer product to deal with. Then definitely they will want to take a quick approach to and diversify their portfolio to be able to invest in that. I'm not too sure whether the BOG, their regulator do not allow them to invest in other assets. Then they will have to seek for regulatory permission to be able to invest in these assets if it will give them a safer returns as well as safer products to add up to their portfolio.
No, thank you, Mr. Simmons. I think we have a question that is similar to what we had asked earlier on the rates. And I think you did mention rightly that conversations are being had to see how rates can be lowered. So I think that answers that. But in the spirit of a lot of investors now coming onto the market with diversified products, so we have commercial papers and the like, is there going to be sort of like an issuance calendar? Because we haven't seen a lot of new money in a while. So if you have issuers coming in at the same time, how is that going to feed into the split in terms of the money that is going to be participated in each of the issuances? So for example, if you have government coming in the same week with, say, an issuer like Let's Share Go or Bayport, or we have some other commercial paper issuers coming, and they're coming to compete for the same new money in the system, how is that going to be? Because government had an issuance calendar which it was following. Is that going to be something similar in the market?
Okay, so you notice that the government is the government will always have its program. That's why how it comes out with the calendar to guide its issuance. Also, that also guides the investors, and especially the banks that participate in the primary market, in the auction program and all of that, so that they will be able to well organize themselves and be able to participate for us to achieve success for the government auctions. But however, when you talk about corporate issuances, you cannot have a calendar for it. You can only have a calendar if you have a number of them line up to come onto the market on different dates. Then you can put out the calendar for the market to guide the market. But these issuers will submit their application, and the application will have to be approved before they'll be able to come onto the market to issue onto the market. What we want to achieve is that we have a shorter period to do the assessment of these applications as they come onto they come to the Ghana Fixed Income market to issue. So we are anticipating that when an issuer turns in its application, a well documented application, it should take the listing committee about just 7 days to work on it and give the nod for the issuer to be able to come onto the market. So we hope that if we have a number of them coming outline out, then we can, based upon that, we can then do a calendar. Else, then you cannot have a calendar for corporate issuers like that. The government, because the government has a number of issues that it wants to do within a period, within a quarter, is able to build up that calendar. But if corporate issuers do not come out like the way we anticipated, then it will be difficult to have a calendar for them.
Thank you. So, Mr. Summers, just like you mentioned earlier, that those rates we experienced around 28-30% was unsustainable. And we are seeing these current rates in T-bills. I'm happy to say that the engagement with the Bank of Ghana and the Ministry of Finance and even the general market is a good idea. But I think it also hinges on the interest rates conversation. So is there any timeline that we should expect for such engagements with the Bank of Ghana, Ministry of Finance, and all that, so that we can see progressive rates drop in the market?
We anticipated to have that meeting in August. We started to talk about to the heads of these entities, especially the debts, Treasury and Debt Management Division of Ministry of Finance. We've spoken to the head, the director about it. we are here to have a conversation with the financial head of the financial, acting head of the financial market. I'm happy that Mr. Steve Opata, I don't know whether he's still on the platform. We would approach him as well, since he has served in that department for a long time. Will also help in facilitating this meeting. Mr. Steve Opata also sits on the governing committee of the Ghana Fixed Income Market. We would also approach the first deputy governor, who is the chairman of the governing core committee of the Fixed Income Market, so to facilitate this for us. So we're hoping to do this meeting in August, and let's hope that if we're able to achieve that, we'll have a conversation and we'll see what can be done about the interest rate. Thank you.
Mr. Augustine Stevens, thank you very much. If you don't mind, you can stay on the call a bit. We have a couple of questions for you, but time is spent. So we want to have our next speaker. So our next speaker is Dr. Ebenezer Ashley. He's a well-learned man. He has a PhD, an MBA, and a Bachelor's Arts degree in various disciplines and from all across the world. He's currently the executive head of research, media, business, intelligence, and market conduct at the Ghana Association of Bankers. And he's here to speak on the topic, lessons learned and policy recommendations for restoration of confidence in the financial markets. Dr. Ashley, are you on? Hello, Dr. Ashley. Dr. Ashley, if you can hear me, you can unmute. Dr. Ashley, could you hear me?
Hello. Yes, so whilst Dr. Ebenezer Ashley is trying to fix his systems. We would move on to the next speaker, who is Lawrence Osilaja Bwampo, my very good friend. He will discuss the topic, a gap analysis of the financial market and proposed regulatory interventions. Lawrence Osilaja Bwampo is an individual with interest spanning across financial markets, investment, public speaking, and leadership. He has over a decade of experience in the finance industry. Lawrence has a strong background in fixed income distribution, debt portfolio, pension fund management, as well as global custody. He supported Ghana government and corporates to issue over 8 billion bonds from the international debt capital market. And he has played a very key role in the issuance and distribution of Ghana's ESLA bond. Lawrence is currently the president of the ACI, the Financial Markets Association of Ghana. Ladies and gentlemen, let's welcome Lawrence. Hello, Lawrence. Hello, Lawrence, can you hear us? Hello, Dr. Wale. Hello, Dr. Wale, if you can hear us. So, ladies and gentlemen, we have Dr. Wale here representing the Bank of Ghana Governor, Dr. Ernest Addison. So we are trying to connect to him before we move on to Lawrence. You know, these big men, their time is very, very expensive. So once we have them, we should take it.
Thank you very much. Yes, can you hear me, please?
Yes, we can hear you loud and clear.
Okay, thank you very much. My apologies for the mix-up. So the governor will not be able to join us today, and so he has asked that I read a speech on his behalf. And so let me thank the Black Star Brokerage for the invitation, and also distinguished guests, investor community, ladies and gentlemen. Let me begin by thanking the management of Black Star Brokerage for the invitation to participate in this year's investor webinar on the theme reflecting on stakeholder gaps, rebuilding investor confidence post DDEP. This webinar is coming at a time that Ghana is in the early stages of recovering from a deep economic crisis characterized by limited fiscal space, financing pressures, rising sovereign spreads, depleting reserve buffers, unsustainable debt, along with external shocks. These challenges were further deepened by credit rating downgrades, due to debt sustainability concerns, which effectively blocked the country's access to the international capital market, leading to eventual recourse to the IMF for a 3 billion ECF program. At the initial engagements to secure the IMF program, a debt sustainability analysis indicated a high total public debt burden of over 100% of GDP, which needed to be lowered to about 55% of GDP in present value terms by 2028. To secure the fund program, on the 5th of December 2022, the government announced the domestic debt exchange program for a voluntary exchange of holdings of domestic notes and bonds. This necessary but painful domestic debt restructuring process impacted all segments of the Ghanaian society, including individual investors, firms, financial markets, and the Bank of Ghana. Mr. Chairman, the 2022 audited financial statements of banks reflected the full impact of DDEP and the challenging operating environment that prevailed in the year. Most banks reported significant losses on the back of the mark-to-market valuation of their respective holdings of Government of Ghana bonds following the implementation of the DDEP. Other losses were due to higher impairments on loans and rising operating costs. The industry posted before-tax losses of 8 billion in 2022, compared with a profit of 7.4 billion recorded in 2021. The after-tax loss was 6.6 billion in 2022, relative to profit after tax of 4.8 billion in 2021. The main profitability indicators, namely return on assets and return on equity, all turned negative in 2022 because of the industry's loss position. The Chairman, just last week, the Bank of Ghana released its annual report for the year 2022. The report showed that Bank of Ghana and its subsidiaries recorded a negative equity of 54.52 billion in 2022, after posting a positive equity of 5.72 billion in 2021. The negative equity resulted from 60.86 billion losses during the year, of which impairment of Government of Ghana security holdings alone was 48.45 billion. The 2021 figure was actually 0.008 billion. Indeed, the DDEP has created a huge gap that the Bank of Ghana has to take steps to close. Broadly, central banks exist to achieve their assigned policy mandates, including price stability and financial stability. Therefore, although the bank's financial position has no immediate impact on its ability to fulfill the price stability mandate, in the long run, the bank's inability to cover costs and build sufficient buffers may necessitate a capital injection from the government, the main shareholder, which could undermine the independence and credibility of monetary policy and weaken the public confidence in the central bank's operations. It is for this reason that the bank's board of directors has approved specific actions to be taken to build back positive equity. These measures include retention of profits to help rebuild capital until equity firmly returns to positive territory, refraining from monetary financing of the Government of Ghana's budget. In this respect, action has already been taken with a memorandum of understanding on zero financing of the budget signed between the Bank of Ghana and the Minister of Finance on 26 April 2023. Taking immediate steps to optimize the bank's investment portfolio and operating cost mix to bolster efficiency and profits. And finally, assessing the potential need for recapitalization support by the government in the medium to long term. I am therefore encouraged that the Black Star Brokerage has brought together industry experts, stakeholders, to reflect on ways to rebuild investor confidence post-DDEP. In my remarks today, I will highlight the macroeconomic experience of Ghana over the past year, especially events leading up to the signing of the IMF deal, before sharing my thoughts on the economic outlook. So, Mr. Chairman, at this point, I would like to move on to the recent macro developments in the Ghanaian economy. Events of the past 3 years, including the effects of the COVID-19 pandemic, the Russia-Ukraine war, led to very challenging external environment for emerging markets and developing economies, including a sharp rise in food and energy prices coupled with the lingering supply chain constraints triggered cost of living crisis across several economies as inflation soared to record levels in many countries. The aggressive monetary policy tightening response to control the elevated inflation, especially in the US, triggered portfolio outflows that strengthened the dollar, causing intense currency pressures with pass-through effects on inflation and pushing up debt service costs in vulnerable EMDs, particularly African countries. Mr. Chairman, in Ghana, these shocks exacerbated pre-existing fiscal and debt vulnerabilities, triggered sovereign debt downgrades and portfolio flow reversals. And by mid-2022, the economic environment had become very challenging, with government financing constraints, rising inflation, currency pressures, loss of reserve buffers. Against this backdrop, the bank stepped in to address auction failures and pay stakeholders maturing instruments to avert domestic crisis. In the process, the central bank was exposed to various risks, which resulted in over 48 billion of impairment of Government of Ghana security holdings. The absence of such support could have resulted in a difficult set of choices, including social unrest for the Ghanaian people. Nonetheless, support from the central bank is suboptimal policy choice and not a sustainable way to finance government expenditures. The government deficit, for example, monetization of the government deficit by the central bank can undermine its autonomy and credibility and potentially de-anchor inflation expectations. Faced with these realities, the government could not solely depend on the Bank of Ghana to meet its financing needs and therefore made a request to the IMF for a program which, among others, will restore fiscal and debt sustainability, re-anchor inflation expectations, eliminate central bank financing of the budget to help achieve low and stable inflation, strengthen the exchange rate regime. It will also deepen structural reforms, restore investor confidence, boost development partner disbursements, unlock other financing sources. In addition, it will build back buffers to strengthen resilience to economic shocks, improve on the country's sovereign credit ratings, and regain capital market access. And finally, diversify the economy to achieve value-added export-driven regime. Mr. Chairman, these measures are designed to address the challenges facing the economy and support structural reforms to promote efficiency and competitiveness. These corrective measures may help restore investor confidence in the economy and reignite portfolio flows. In addition, it could also unlock additional donor funds that were withheld because of the crisis. Mr. Chairman, I will now take a look at the outlook for the global as well as the Ghanaian economy. Although the external environment has improved somewhat since the start of the second half of the year, policymakers face difficult trade-offs of easing the elevated inflation without triggering a recession while also preserving financial stability. The first quarter of 2023 banking sector turmoil in the United States, which was triggered by interest rate risk, is a reminder of the delicate nature of this balancing act. Under the present circumstances, the possibility of a global recession has become a major or a larger risk, given the persistent nature of inflation across several countries. Recent data releases show that although global activity surprised on the upside in 2023 quarter one, the picture in the near term is mixed, with emerging signs of moderation in the services sector, especially in China. In Ghana, the government under the IMF's approved $3 billion ECF program has committed to policies aimed at restoring macroeconomic stability and debt sustainability while laying the foundation through wide-ranging structural reforms for higher and more inclusive growth. Government has embarked on structural reforms in areas such as strengthening public financial management, revenue administration, and tax policy, and energy sector reforms, as well as enhancing the efficiency of state-owned enterprises. Also, under the IMF program, the government has committed to improve the business environment and export competitiveness, promote entrepreneurship, and support private sector development through various initiatives. With regard to the Bank of Ghana, the Monetary Policy Committee has since 2022 taken decisive monetary policy decisions to contain the rising inflationary pressures. Currently, headline inflation has declined from the peak of 54.1% in December 2022 to 42.5% in June 2023. And the forecasts indicate further declines in the month ahead, supported by the tight monetary policy, easing pressures from energy and food prices, and exchange rate stability. The ultimate goal of the Bank of Ghana is to bring inflation back to the medium-term target of 8 plus or minus 2%, rebuild foreign exchange buffers to at least 3 months of import cover by the end of the program, and ensure financial stability in the aftermath of the DDEP. As part of the IMF arrangement, ECF arrangement, the Bank of Ghana has signed a memorandum of understanding on zero central bank financing of the budget with the Minister of Finance. This will reinforce efforts to achieve debt sustainability for the medium term, as well as help the bank re-anchor inflation expectations to deliver on the price stability mandate. These fiscal and monetary policies are expected to support private sector development, financial inclusion, and inclusive growth. So I would like to conclude by noting that Ghana is a small open economy, and so external shocks and domestic fragilities will always pose risk to economic performance. This calls for stronger policy frameworks, structural reforms, and building of enough buffers to withstand the global shocks when they occur. There is a lot of hard work yet to be done to restore the economy back to its potential, and I hope that the deliberations at this workshop will provide some useful lessons to hasten the process and support government's efforts towards restoring macro stability. On this note, I wish you fruitful deliberations. Thank you.
Thank you very much, Dr. Wale. We have a couple of questions for you, and I'm very glad you mentioned interest rate risk from the US. We've had a couple of questions on the call about interest rates here in Ghana, and I think the key question is, are interest rates going to go down anytime? Because in March, when interest rates went down, a market that actually usually chases yields actually lauded that initiative. So are we going to see that anytime soon? Because the market is worried about the sustainability of borrowing of government at the moment.
Yeah, thank you very much. The Monetary Policy Committee has just finished their meeting. And at that meeting, the decision was made to raise the policy rate by 50 basis points. And this was as a result of the risk, the inflationary risk that they felt needed that action. And so what I can say is that the forecast suggests that inflation will come down down the road. And so eventually interest rates will follow as inflation comes down. At this point, the decision was made based on the data that we have, and the data showed that there's the need for them to hike the policy rate. But when the picture improves, interest rates will definitely come down. Thank you.
Is there any time frame for that?
You know, we are in a world where shocks occur on a daily basis. And so it's something that we cannot say next month or this month, or but what I can say is that as the inflationary pressures are contained, interest rates will come down.
Thank you very much, Dr. Wale. We appreciate your comments and inputs to this program, and the market have listened, and we have taken cue, and we are sure that these policies and the energy put in place would help resuscitate the market. Thank you.
Thank you very much.
All right, so I think we have Dr. Ashley on the line now, Head of Research, Ghana Association of Bankers. Dr. Ashley, can you hear me?
Yes, I can hear you.
Yes, if you can go ahead, we'll be happy.
Okay, thank you very much. First, I would like to apologize for the mishap. I'm happy at least I could hear smiles on your face. Finally, we could do the presentation. Good morning to all your participants in this particular program. The presentation will be centered on the post-DD that's the Domestic Debt Exchange Program. What are some of the lessons and that we have learned from the program, the policy recommendations that will be able to help collectively the nation to move forward whilst reposing confidence in investors with regards to the financial market activities. And so this will be the basis of our submission today. And yes, could we move to the next slide, please? Hello? Hello?
Yeah, we can hear you. I'm moving to the next slide.
Yes, because you decided to share the slides, I have not loaded it up here, so we could work with your slides.
Okay.
Okay, sure.
Yeah, so the presentation is segmented into 4 parts. The second one is actually part of the first one. So we have the introduction, which would actually focus on debt restructuring, and then the brief historical facts about debt restructuring. What are some of the lessons that we have learned from the government's decision to engage in debt restructuring? And the basis of the experiences, what are some of the recommended measures that would help us come out of the wool and be able to move on and conclude with brief statement. And so we're looking at debt restructuring. It is not a gainsaying that investors, not only in Ghana, but throughout the world, become quite worrisome when they hear of debt restructuring, because any attempt to restructure sovereign debt would send shivers down their spine because of the likely impact on their investments. Now, for most part of the current year and forward, people are looking at the reminiscence of the crisis during 2007-2008, the financial crisis, and beyond that, people are even worried about what transpired between 2009 and 11, that's the Eurozone debt crisis. And beyond that, 2020, we had the COVID-19, which actually ushered us back in terms of our economic development. And most of these occurrences mean that the nation in question is likely to be impacted, and globally, we are likely to head towards another recession. And so on the basis of this, most investors are not happy when they hear of debt restructuring in any sovereign country as we speak. And that has actually been a watchword. And so what briefly, I could tell from the interactions that the moderators and participants are quite aware of what debt default is and then the debt restructuring. And so the definitions that I have been able to put together here, we may be able to skip. At least we know default occurs when sovereign is unable to honor its debt obligations as they come due. And then the restructuring process actually involves the process of identifying, and beyond that, also organizing the measures that would ensure that the country's accumulated debt and repayment schedule are put back on the right trajectory to facilitate government interactions with investors in both the internal and external financial markets. This is quite important because if there are no laid-down procedures, it becomes difficult for the implied country to go back and trade and transact with investors globally. Now, we observe that the debt restructuring process of the country had a couple of effects, and these rippling effects actually cascaded down to various aspects. We have individual investors, institutional investors, households, and economies that were affected by the exchange. Could we please move to the next slide? And so we're looking brief historical facts. Now, these have been summed up. There are more that will be shared in later publication. This is not intended to defend or provide justification for the nation's journey towards debt restructuring. It is not a good omen, but in doing so, we had to find out if indeed Ghana was the first, or Ghana is among the highest number of countries and that have engaged in debt restructuring. And from the submission, we could tell that we realized that the lower income countries are actually at risk when it comes to debt restructuring issues, because they become torn between either restructuring their debts or continue with the funding for schools and hospitals, which are basic social amenities that they need to ensure the survival of the citizenry. Now, the estimates as released by the World Bank indicate that close to 400 billion of international market debt would be the subject of debate when it comes to debt restructuring in the current and subsequent years. Close to 400 billion. It is likely to increase when we are to look at it in the longer term. And also globally, the PIGS countries remain on the watch list of analysts when it comes to debt restructuring. They are the most risky countries. Now, when we talk about PIGS, PIGS here basically represent Portugal, we have Ireland, we have Italy, we have Greece and Spain. So Portugal, Ireland, Italy, Greece, and Spain are the most delicate, let me put it mildly, countries when it comes to debt restructuring globally. And Greece is also noted for being the first to default in 377 before the birth of our Lord and Savior Jesus Christ. And after independence in 1820s, has also defaulted 5 times. Now, Spain holds the record when it comes to defaults, 6 times during the 1700s and 7 times during the 1800s. However, fortunately for this particular country, there has not been any default after the 1800s till date. On the whole, if you have to look at it on the regional basis or from the regional perspective, then Latin America leads in terms of sovereign defaults. Brazil, as we know, is one of the fastest growing emerging economies globally. However, it has already defaulted 9 times. Uruguay and Costa Rica have also disappointed investors 9 times, just like Brazil. Venezuela leads the pack in Latin America with 11 defaults, followed by Ecuador with 10 defaults. Now, at least 7 sovereign defaults were recorded during 2022, that is last year. These defaults actually extend to include Mali, we have Russia, we have Sri Lanka, Belarus, El Salvador, we have Ukraine and Ghana. Other sources even add up Egypt and Tunisia as well. So at least 7 sovereign defaults were recorded during 2022, which included Ghana. 2 countries have already defaulted in the current year. They are Argentina and Mozambique. They have already defaulted. Now, one important point to wrap up with the brief historical facts. In most cases, sovereign defaults are economically or politically driven and not necessarily due to lack of financial resources. What it basically means is that not every default that we hear means the country has no financial wherewithal to salvage the situation, but because the country thought it necessary to default as a way of strategically coming out of the debt hole and being able to accelerate in terms of development. So not all defaults imply that the country is financially strapped, but then it could be economically or politically driven. Could you please move to the next slide? Hello. The next slide, please. Okay. Yeah, so what are the implications of the government's decision to embark on the debt restructuring on the economy? We look at it from 2 perspectives. First, what are the effects on the financial sector, and then the effects on the broader economy? For the financial sector, we realized that most of the banks in the country held bulk part of the government's debt. And so their exposure to government securities and debt was quite high. On the basis of this, the balance sheets for most banks were adversely impacted. And this is evident in the fact that for last year, 2022, our financial year, the shareholders' funds for the industry reduced from over 26 billion in 2021 to a little over 20 billion in 2022. And so clearly it wasn't a good news, it wasn't good tidings for the broader financial sector and particularly the banking industry, because it wasn't good tidings at all. And this actually speaks to the volume of the rate at which higher exposures the banks were with regards to the government securities. Now, we also realize that key performance indicators such as the capital adequacy ratio were strongly impacted adversely by the sovereign domestic debt restructuring. And to refresh the memories of our participants, we know that the capital adequacy ratio has at least 2 important functionalities when it comes to a bank or financial operations. First, it helps in determination of solvency of banks, and second, helps in the measurement of banks' ability to absorb potential losses emanating from bad loans. And so when the capital adequacy ratio is adversely impacted, it becomes difficult for the strength of the banks to be determined with relative ease. Now, the third one, domestic creditors, including banks, suffered significant losses since they predominated domestic debt holders. Yes, it was quite clear from the search that banks alone held about 32% of the government's debt. Now, if you are to broaden it to the wider financial sector, then we had about 42.1% of government exposure being in the hands of banks, the insurance companies, and pension funds alone. These 3 categories held about 42.1% of government's debts during the year under review. We emphasize that the banks suffered significant losses. And this is exemplified in the fact that significant impairment losses of over 19.23 billion were recorded by the industry last year. Now, this is against 1.43 billion in the preceding year, which is 2021. So you realize that we had quite a high number of times in terms of measurement, the impairment losses that the industry recorded relative to 2021. We also learned from the debt restructuring experience that banks were threatened with solvency issues and protected liquidity challenges. Now, this is also evidenced in the fact that the banking industry ended 2022 after tax of over 6.02 billion. And this is actually estimating to somewhere 15% of the nation during the year under review, and that is high on the high side. Now, the financial systems and this related stability were severely rolled by the concentration of the restructuring on sovereign domestic debt. It's quite obvious, and once again, to buttress this particular assertion, we realize the provision for bad debt. Over 50%.
Hi, Dr. Ashley.
Hello.
Yeah, your volume keeps fading.
Oh, okay. Is it better? Is it better now?
Yes, we can hear you.
Oh, okay. Yeah. So, could you indicate where you couldn't hear me well so that I could retake? Or
no, it just went off right now,
okay.
so you can go ahead.
Thank you very much. And so the trickle-down effect from the government debt restructuring actually added to the compendium of challenges rather than subtracted from the identified difficulties that warranted or necessitated government's strive towards restructuring of the debt. And so the sector did not actually benefit from the initiative, and that's quite clear because Ghana is no exception when it comes to debt restructuring and the implications for the financial sector. Please go to the next. So on the broader economy, what is it that we observed or witnessed? We realized we had series of downgradings from the international credit rating agencies, Moody's, Fitch, all Standard & Poor's had lower gradings for the country because of our inability, first, to meet the domestic debt expectations, and second, the need to look externally to also restructure those debts. These were quite worrying, and as captured, we realized in December, Fitch actually downgraded the country from CC to C to affirm our inability to meet our debt obligations. Also, the partial guaranteed $1 billion note maturing in 2023 was downgraded from B- to CC by Fitch. This is one of the three major credit downgradings that we suffered as a result of the decision to embark on the debt restructuring. Now, we also realized that the Bank of Ghana, as part of measures to control or curb inflation, decided to raise the policy rate, which invariably also affected the interest rate that the banks or various financial institutions were charging on the contracted loans. However, this did not actually inure to the benefit of the entire economy positively because the cascading effects were not positive. We ended up with higher food prices, transportation and energy prices all skyrocketing during the year. We're still trying to tame these prices, but they are not as we would desire them to be in terms of lower levels. Now, challenges to regaining access to the international financial market. Yes, it was quite obvious that from an analytical point of view, the decision to restructure the external debt meant the country's access in terms of acceptance in the international market might take a while. And that actually happened. Fortunately, with the completion of the debt restructuring, it is expected that the international investors would reconsider their position and see the need to retransact with Ghana. Now, investors' confidence in the economy was also eroded, especially due to the protracted debt negotiations. Hawaii capital flight became a very strong option for some investors. It is quite obvious, yes. When investors realized that their funds would be adversely impacted, they were not happy, especially when the decision was also being bureaucratic and final decision was being stalled. This actually did not sit down well with most of them. And the decision to reinvest in other economies came to the forefront instead of being relegated to the background. Now, mark-to-market losses for fund managers were very high. At the middle of the negotiation, it was estimated that over 3.7 billion has been lost by fund managers due to the government's decision to restructure the debt. The debt consideration from start was about 130 billion, which translated to about 10.40 billion US dollars. But the decision to exclude the pension funds actually reduced it to close to 100 billion Ghana cedis, which also reduced in dollar denomination terms to about 7 billion or 8 billion dollars. Then the demand, one advantage, major advantage that the country derived from the decision to restructure is the lower cost of debt. Obviously, if the amount owed is being reviewed, then it is quite obvious that the total commitment and obligation would also reduce. And this actually reflected in the recent budget reading, during which it was quite clear that a supplementary budget was not needed because of the obvious positive effect of the debt restructuring on the entire economy, which actually did not warrant the need for supplementary, especially given the fact that the external funding for capital expenditure was also reduced or reviewed downwards. And so this is quite refreshing to the nation as a whole. But then it is quite sad when it comes to the analysis from individuals and organizational perspectives. Now, the other effect has to do with the fact that due to the situation, we all witnessed this, the demand for foreign currency outweighed the available currency supply. And this actually meant the skyrocketing of the exchange rate. It increased the volatility of the local currency relative to major foreign currencies, especially the dollar, the British pound sterling, and then the European euro as well. Could we please go to the next slide? Hello. Cool. Yeah, so we start from here. Yes, based on the intention of government and the effect on the major sector of the economy, which actually drives the success of the country, that's the financial sector, and the effect on the larger economy. How do we ensure that the investor confidence that was lost due to government announcement is regained to, one, maintain vibrant financial sector and an economy that is not only stimulating, but is characterized by robustness and resilience? These are the watch phrases that will guide our activities in the country, and in a way exemplified in the recommended measures to help us move forward and accelerate our recovery and growth rate within the economy. So over the years, they will realize that the decision to embark on debt restructuring, whether domestic or foreign, is intended to ensure that the implied economy, in this case Ghana, retake its role with regards to active economic activities and then attract both local and foreign investors. Now, to do this, it is quite imperative that any decision with regards to debt restructuring forms an integral part of any broader policy of the country, so that the implementation wouldn't be sidestepped to its fruition as expected within the economy. On the basis of this, or having said this, what are some of the policy recommended measures that we could implement to help us come out of the quagmire or the wool and not revisit such experience within or in the medium and long term? As we speak, there are some nations that have never tasted debt restructuring in modern history, even though we have quite a number of them that have done so. You talk about a few countries on the continent that have not been able to restructure their debts because they've lived up to expectation. And few of these are Finland, Malaysia, we have Mauritius, that's the major African country in the category, New Zealand, Norway, Singapore, England, Canada, Denmark, and Belgium. These are some of the few global countries that have not tasted debt default in modern history. And it is quite encouraging. We could emulate such examples and see how best will come out of it. So yes, it is important for the economy to consider the need to restructure. And it is also known that the decision to restructure any debt always remains the prerogative of the sovereign country. However, it is imperative for the country at issue to consider the need to weigh the potential damages that the restructuring decision would have on the broader economy before embarking on such journey. And when it is embarked on, what are some of the caveats that will assuage the effect on the broader economy? These are quite important. And what it means is that we look out for the mitigating factors, even though we want to embark on the debt restructuring, should we find ourselves in such situation in the medium or long term. It is also important to determine the benefits. In other words, it is important for the country to embark on cost-benefit analysis regards to the decision to restructure the debt, whether it will inure to our benefit more than the challenges or consequences that would before the country when it comes to the decision to default. Now, it is also important for the government to engage creditors, government being the debtor, the lenders being the creditors in this case, being engaged early and also being transparent in the exchanges so that they get to know of the economic situation of the country and take the necessary steps to make decisions that would inure to the common good of the entire nation. Yes, they've invested, but if we are frank as a nation, early to the creditors, they may be able to jaw rather than war with the government when it comes to decisions on the debt restructuring. So yes, consultation with them, as we found out later, is quite necessary. And this actually is exemplified in the example of Jamaica. Jamaica had to restructure the nation's debt in 2010, known as the National Debt Exchange, and then 2013, Jamaican Debt Exchange. The 2010 wasn't too successful. Some analysts attributed it to the government's inability to effectively implement the program. 2013 came out in earnest and was quite successful. But the government decided to engage the people before the announcement. So the announcement was just a formality because the people were already there. The creditors were already aware of the announcement that the government will put out in the public domain. So that is, the engagement is quite important when it comes to this particular initiative. There are many of them there. We also look at the fact that, yes, it is important. This measure was recommended before the final decision and is being reiterated because of its efficacy when it comes to implementation. To minimize any effect on financial institutions, particularly the banks, it is important that government considers the extension of maturity period and reduction in the policy or interest rate rather than affecting the nominal amount that the investors stand to claim eventually. Yes, so we could extend payment period. We could review the premium or the interest that was agreed on, but then the principal amount should be maintained so that investors wouldn't be gravely disappointed in the government. Now, banks must also strive to ensure early recognition of losses. That was done in partnership with the the Institute of Chartered Accountants, Ghana, the recognition was made, and this actually translated into impairment losses of over 19.23 billion for the entire industry last year. This is quite important, so that it will help in streamlining the capital buffer for various member banks. It is also important that the banks are encouraged and assisted, supported with emergency assistance financially, so that they would be able to meet the needs of their depositors or customers in such challenging times. In such times, the liquidity of the banks speaks volume of how resolute the economy is. If the banks are unable to meet the basic withdrawal needs of their customers, then rigidity, robustness of the economy become an issue, and they become questionable. And so when the banks are liquid during such crisis period, it helps to defray and also take the general public mind off any eventual consequences that will not help the growth of the economy. So yes, helping and assisting the banks in difficult times with system-wide emergency support is quite necessary, so that we'll be able to maintain the fortress of the financial system, particularly the banking industry. Now, as mentioned earlier, we realized it is being re-echoed here: fairness and transparency. These are two watchwords that will be needed to ensure the success of the initiative. Now, what are some of the further recommended measures? These are practical illustrations for the bank. Banks should consider diversification of their investment portfolios with strong concentration in private sector lending. Yeah, so the one would say the periods during which perhaps we'll have government's stake in the portfolio of banks being very high. The experience has taught us that yes, banks should re-diversify their existing investment portfolios and ensure that the concentration or the access to the private sector investment becomes higher than it is today, so that in terms of national difficulties, the banks will not find themselves wanting. Consideration should also be given for recapitalization. As in this has come up, the regulator has given the banks up to September of this year to indicate how they intend to recapitalize. Yes, on this, I would also like to reiterate the need for the Financial Stability Fund being established by the government through the Bank of Ghana to be expedited, so that banks that may find it difficult to raise funds externally may be able to latch onto this opportunity to maintain the stability of the industry whilst they seek external funding to make their operations quite effective as expected. So yes, it is very important that recapitalization is considered at this particular point in time. And also from the recommendation, I could see the conclusion has been pulled up, but then the last one on the recommendation, yes, it is important that the regulator review the single obligor limit for investors in the financial sector, especially the banking industry, so that within this difficult moment, they will be able to meet their financial needs externally or out of the banking industry. In conclusion, I would state that the practical and fair architecture inherent in these developed rules, procedures, and processes for sovereign debt restructuring remains inevitable in the nation's quest for debt sustainability. What it means is that it is quite obvious that we will need identified process that would ensure the restructuring of our debt would achieve the desired objective. That is, we would get back onto the declining trajectory and not increasing it to unsustainable levels. Now, it is also important that the crisis management will require that we maintain the pedestal on debt management. We look at the restructuring of the debt not before, not after we have challenges, but then if we have red flag or any reason to believe that the nation's debt is skyrocketing, then we should be able to tame it to prevent the untoward. It is also known that if we should have investors giving listening ears to the country, then it should not be out of place to conclude that the investors are having or reposing their confidence in the economy. And this would speak volume and very well of us. We need deliberate efforts collectively to ensure that we'll be able to put the economy back on its desired level of development through the concerted effort. And I'm sure when we do this, meeting the internal and external pressures and being able to tame the economy as expected wouldn't be much of a difficulty for us. Collectively, we'll be able to maintain a financial system that is quite strong and vibrant and have an economy that is characterized by the resilience and then the robustness that we require, so that we will not be able to recall some of these challenges in the medium and long term. This shouldn't be our habit for a very long time to come. On the basis of this, I say thank you very much. And if you have questions, as indicated on the subsequent slides. So please move to the next slide.
Thank you very much, Dr. Ebenezer Ashley. Did you say we should move to the next slide?
Yeah, which is to thank you and then indicate if there are questions.
Awesome. So thank you. It looks like we are not alone in this DDEP program. It looks like a lot of countries, like you have mentioned, and particularly also the recommendations for banks to even consider diversification of their portfolios. And also, as you mentioned, the stability fund, it should be expedited so that banks can also access and all that. Thank you. We are most grateful. So we might have some questions for you, but we will move on to Lawrence. And please stay put when we address some of the questions for you to address. So Lawrence, if you're ready, we're also ready for you to kick.
Okay, clarification. Actually, Mr. Lawrence Saki has no presentation to make. He's my colleague here at the Ghana Association of Banks. Had to log on to his device to make sure the presentation was successful.
Bompon, yes, who is taking up to a next slide. I think the names are quite similar, so I guess, yeah, but that's fine. Thank you very much.
Oh, you're welcome. Okay. Oh, okay. So the name resonates. Okay. Okay.
Hi, George. Good afternoon. Can you hear me? Oh, it's good morning.
I can hear you loud and clear.
Good morning. Awesome. Awesome. Thank you all so much for the invitation. And I see we are way behind time, so we'll try to keep this really within time. But thanks once again to the Black Star team for the invitation extended to ACI Ghana for us to share our thoughts on some gaps in our financial markets and what we think as our regulators could probably do to restore some stability into our financial market. So thank you once again. Now, I will be doing a brief presentation and it will follow this sequence. We'll look at an overview of Ghana's current financial markets, and then we'll delve straight into the gap analysis, where the challenges are, which areas we think need to be fixed, and we'll look at the importance of regulatory interventions, and of course, some proposed regulatory interventions that we think will be helpful, and the need for collaboration and stakeholder engagement, which we think cannot be rolled out. And lastly, we'll try to summarize this really nicely. Now, I think it's important for us to set the tone of what a robust financial market looks like, and because it's very important in fostering the economic growth and stability of any country. So I'm sure most of us are familiar with the fact that it brings about efficient capital allocation, where there are investment opportunities, where we see stability of currency and foreign exchange, where we have massive financial inclusion, and where there's access to finance by SMEs, businesses, entrepreneurs, and all individuals who want to go into that space, including loans, equity financing, and insurance, and where there obviously is confidence and where there's confidence and investors are confident in the market that we deal in, because a well-regulated market and a transparent financial market will instill confidence in investors, and it will go a long way in fostering positive investor sentiment. And we believe that this would also go a long way in attracting domestic and foreign investment. So pretty much when you think of a robust financial market, we expect one that has all this, because if we talk of investment opportunities, we are looking at a vibrant financial market that offers a wide array of investment options and opportunities to both retail and institutional investors. So really, when we look at a robust financial market, we believe that a strong and a well-regulated financial market is very critical in promoting economic growth. And we think that if we as a country are able to put our things right, obviously we'll be on the right track. But I need to emphasize that our regulators have played a significant role in bringing us this far. The SEC, the Bank of Ghana, and all relevant stakeholders have been very impressive on that score. Now, quickly, we'll look at a summary of Ghana's financial markets. This is just a quick overview. And we know that our financial market is a very vital component of our economy, because it encompasses all the key segments that all facilitates the allocation of capital, the provision of financial services, and all the attributes we spoke about on the previous slide. So we'll just do a quick delving into the key segments, and we have a couple of them. We have the banking sector, which I believe is not new to us, and this comprises of commercial banks, savings and loans. And basically, we know that the banking sector, they mobilize deposits and provide credits to individuals, businesses, and the government. And they also promote financial intermediation and go a long way in supporting economic activities. Now, the banking sector is one of the biggest segments of our financial market. If you look at the total asset base, as at June 2023, it stood at 242 billion. And this is up from 180 billion in December 21 and 221 in December 22. And we also see something huge on the deposit side, where at the end of June 2023, total deposits stood at about 187 billion. And this is also up from 121 billion in December 21 and 158 in December 22. Now, from this, I think it's quite obvious that deposits continue to drive, and they continue to drive the funding of our total assets. And if you look at the figures we have there, I think we've seen a strong growth in deposit base from as high as 16.7% in 2021. And then it also increased by some 30% in 2022. So the banking sector actually is the backbone of our financial market. We can also look at the capital market. And when we look at our capital markets, I think it's not limited or restricted to Ghana Stock Exchange and Ghana Fixed Income Market. But that's not to say that they are not important. These are the pillars of our capital market. We have the Ghana Stock Exchange, we have GIFIM, the Ghana Fixed Income Market, we have the alternative market, which was established somewhere in 2013 as a platform for startups and SMEs to raise capital. And I think one unique thing about the GACS is the fact that the rules are less strict, and the ease of accessing funding on that market is a lot more easier. And I think this is one area where SMEs can really look to when they hope to raise funding, other than resorting to the traditional way of financing through banks. I think the commodities market is also another aspect of our market, which was launched by the stock exchange somewhere in 2018 to link buyers and sellers and help secure competitive prices for products and basically improve quality. Now, if we look at the size of our capital market, we see capitalization as of December 2022, somewhere around 64 billion. And we've seen this grow to about 70.2 billion at the end of June 2022. I think the GIFIM market is one of our biggest success stories in terms of our capital market as well, where we've seen turnover improve significantly from about 17 billion or so in December 2016. And at the end of 2022, turnover was somewhere around 230 billion. But for the DDEP, which we all are aware of, kind of eroded confidence and affected a lot of market activity. And we've seen just very little activity in 2023, but I am very optimistic that with all the efforts that all relevant stakeholders are taking, we believe that with time, we'll come out of the woods, because our fixed income market has actually been on a steady course. We've seen significant improvements, and all the efforts that Stock Exchange, GIFIM have all put into this. And as market participants, I'm sure we're all part of the story. And of course, if we look at our outstanding debt stock, I think we've seen that outstanding debt stock continues to increase. At the end of June 2023, it stood at 193 billion. And that's for government securities. And for the corporate market, we see it around just less than $1 billion. That's about 600 million. And I think that's where there is a lot of work for us, and where we need to provide avenues and opportunities for corporates to list or corporates to raise funds on or access the capital markets. I think the insurance sector is also another key aspect of our financial market, having looked at the banking sector and the capital markets. The insurance sector also has seen steady growth over the period, with their gross written premium rising from as high as 3.9 billion at the end of 2020 to about 6.1 billion in 2022. And I must say that the growth rate has been impressive, and from a 9.8% growth rate in 2020 to 19.5% in 2021 and circa 30% in 2022. I'll just jump straight to the pensions industry. I'll move straight to our pensions industry. And when we talk about pensions industry, I think it's one of the very important aspects of Ghana's financial market. If you look at how well our pensions industry has grown from the times of SNIT to the introduction of the three-tier system, and how we've seen AUM increase year on year, and thanks to the efforts of all regulators in this space, the NPRA, the SEC, and all stakeholders, we've seen a lot of growth in the area of pensions. So I'll just break it down between the Basic National Social Security Scheme, that's the BNSSS, which had an AUM of about 8.4 billion in December 2016, and we saw the AUM grow to as high as 11.5 in December 2021. Now, the private pension looks at the tier 2s and the tier 3s, and we've seen significant growth there, and where our figures stood at about 6 billion in December 2016, and at the end of December 2022, the AUM of private pensions stood at about 35 billion. So in all, I think at the end of 2021, our total pension industry stood at an AUM of 39.4 billion. We can't talk about our financial market today and leave out fintech, because the fintech space is one space which is evolving, which is growing, and I think Ghana's fintech landscape covers the banking and financial service sector in insurance, telecoms, and we have had one of the most promising and scalable fintech ecosystems in Africa since the emergence and its popularization somewhere in 2008. And according to the Bank of Ghana, as at the end of June 2023 report, I think if you refer to the summary of economic activities report, the total number of registered Momo agents, which for me, I think is a big boost for employment, stood at about 773,000 registered agents, out of which 571 are active. Now, if you look at the Momo accounts, the number of investors or users who are subscribed to these platforms, we see it stand at about 22.1 million active Momo accounts today. And the number of transactions is in excess of 530 million transactions as at the end of June this year. Now, this is also a significant growth compared to what we've seen in previous years. And trust me, this is one space that I think we all need to look out for in talking about our financial market. Now, I think it's important, and that's actually the purpose of this discussion, for us to look at the gaps or the areas or the challenges that we think need to be addressed or need to be looked at critically. We've tried to itemize a couple of these areas, and ranging from financial inclusion, limited access to credit, low levels of financial literacy, And obviously, this was quite evident during the just concluded DDP in February. The limited depth of our capital markets, inadequate regulatory framework, cybersecurity, and all that. So these are some of the gaps that we have identified which needs to be looked at really, really, really critically. Now, with financial inclusion, I think as a country, we have made significant progress in this space, but there is still a lot of work to be done because there are a lot of unbanked and underbanked individuals, particularly in the rural banks, and it hinders their ability to save, to invest, and participate fully in economic activities. So that is one area that we need to look at. A lot of work has been done, but of course, that's the purpose of such workshops, such engagements, for us to re-emphasize the need or the importance for us to put a lot of effort and activity in this space. And this is on the back of appreciating the work that has already gone into this. And the benefit of this is that we would see a lot of increased financial inclusion, which would obviously foster economic growth by empowering individuals with access to credit, savings, and insurance opportunities. I think SMEs generally struggle to access affordable credits from formal institutions, the banks and the likes, due to the perceived risk and the high collateral requirements which are usually placed on them. And this also goes a long way in restricting or affecting their contribution to the economy at large. Now, this is one area that we ought to look at critically as well, because the moment we improve access to credit, the moment we make it a lot easier and a lot accessible for individuals, SMEs, and businesses to access credit and funding, then we would see a lot of business stimulation, we'll see a lot of growth, job creation, and of course, economic diversification. We can't talk about gaps in our financial markets and leave out the fact that there is a lot of work that needs to be done in the area of financial literacy. I think as investors, as individuals, generally I think most Ghanaians generally lack some basic financial literacy, and this kind of affects the decisions we see them taking on a daily basis. We can talk about all the issues of some institutions that happened a couple of years ago, people making wrong decisions, people being swayed by high interest rates and not considering the risk implications, people not even understanding the nature of the products they are investing in and all that. So I think there's a lot of work that has to be done. I need to acknowledge the fact that we've seen a lot of training organized by SEC, time with the SEC. We've seen in the Ghana Stock Exchange organized trainings with investors, with market participants, even with journalists. We've seen all these things done. And we believe that there is a lot of work that has to be done in this space, because the moment we have financial literate consumers and investors, then they'll be better equipped to assess their risk and understand the financial products that they are investing in. And this will obviously go a long way in enhancing consumer protection. It will build trust, and we'll see a lot of participation in the financial market. Limited depth of capital market, I think, but for the recent DDP, our capital markets, especially on the bond side and the equity side, has seen significant growth. But I believe that there are still a lot of areas where we need to expand the depth and breadth of our capital markets. That way, businesses will not have to rely necessarily on banks for financing their long-term projects. I'll just keep to cybersecurity. Cybersecurity, in the sense that the growing adoption of digital financial services exposes consumers, market participants, financial institutions, and users to cybersecurity threats. And these threats are actually real. And we think it's high time a lot of strengthening of cybersecurity measures are being measures to strengthen our cybersecurity measures are being put in place, and as well as data protection regulations, which will be critical for safeguarding the customers, safeguarding financial information of customers. Limited diversification. Today, a lot of concern or question hovers around what investment options are available to anyone who wants to invest. If you do not buy a treasury bill, if you do not buy a bond, then what is there to be bought? And so we think that there is a need to deepen our markets. Today, our markets could benefit from this potential diversification and have a lot of reduction of systemic risk, because we think that it is important that as a market, we deepen it and make a lot of investment options available for users, for investors, for consumers to access the market. That's why I would also applaud the Ghana Stock Exchange in collaboration with Bella and I think Stanbic Bank last week when they had a symposium on the development of a commercial paper. Now we need to get to the point where businesses, firms understand that it is a lot easier to raise funding other than the traditional banking means. And this would also promote liquidity and ensure that the market moves actively. So these are a number of gaps that we have identified on the market. Now, I think it's important for us to look at case studies of other countries who have put in place some regulatory interventions and how these has gone a long way in improving their economy and how we can replicate some of these things in our country. We have Singapore, the FinTech regulatory sandbox. We have the mobile money regulation, which was also introduced in Kenya. And we have the comprehensive credit reporting in Australia and the open banking. I think the Singapore experience is one that most of us are familiar with. Now, the FinTech regulatory sandbox, it enables financial institutions and FinTech players to experiment with innovative products or services in a live environment, but within a well-defined space or duration. And this calls for a lot of innovation. We see when our financial institutions are given opportunities to experiment, then we see a lot of innovation come to the market. On the previous slide, I spoke about limited diversification. Limited diversification in the sense that we do not have adequate products on the markets to make it attractive for investors or even businesses and individuals to access the markets. This is where the regulatory sandbox comes in. Now, Singapore introduced this sandbox and they provided a controlled environment which made it a lot easier for financial institutions and startups to experiment their innovative products and services. We need to embrace the fact that we are in a digital era and this is where the world is going to. So what kind of measures can we put in place? And Singapore took a lead in that space. I know Ghana, we've also made significant progress there, but we need to ensure that we encourage our participating banks and institutions to all subscribe to the sandbox. And this has gone a long way because the sandbox approach which Singapore introduced, we saw that it brought about successful deployment of various fintech solutions, and of course it helped broaden the financial market of Singapore. I think the Kenya experience of their mobile money regulation is also important. Now, M-Pesa in Kenya is a mobile financial service which was officially launched in I think 2007, in March, and it's a system that enables users to deposit, send, and withdraw funds using their mobile phones without a bank account. Now, the point we are trying to make here is Kenya is one of the leading countries on the continent with a deep penetration in the mobile money space. And I think Ghana is also doing something significant in that area. Now, the mobile money services in Kenya has increased significantly. And by this, it has allowed a lot of unbanked individuals and unbanked individuals and businesses to access various financial products and services such as insurance, payment, savings, and all that. So these are just examples. We can go on and on and on to look at some of the successful efforts that have been taken by other countries in developing or broadening their financial markets. What then do we think should be the way forward? What are some of the regulatory interventions we are proposing? I think at the start of my presentation, I indicated the fact that a lot of work has gone into building a robust financial market. We cannot underemphasize the importance of what the Bank of Ghana has done, and we can't underemphasize the work the SEC, GSC, they've all done. So pretty much, I think the purpose of this workshop is just to throw more light on what has been done, what is being done, so that we can ensure that a lot of progress is made on this score. I think the National Financial Inclusion and Development Strategy, which was rolled out in 2018, speaks a lot to what needs to be done in the area of financial inclusion. And we see that that document clearly is designed to coordinate the efforts. And of course, we think that there's a need for effective monitoring and execution, because financial inclusion, we are hoping that regulators would mandate or encourage banks to offer low cost basic savings accounts to encourage inclusion. It is difficult for individuals in rural areas to access to be in the financial space because of the costs associated with it. Now, these individuals are deterred by the cost of opening a bank account. They are deterred by the cost of transacting. They are deterred by the fact that access to branches or agent banking is difficult for them. And so that way they are cut out of the financial system. Now, the National Financial Inclusion and Development Strategy clearly outlines what ought to be done and how agent banking has to be promoted, how branchless banking has to be promoted, how Momo has to deeply penetrate into every area and ensure that everybody is on that score. Today, SME businesses, individuals can make payments using Momo. And thanks to operability, regardless of interoperability, regardless of the network you're on, you're able to transact on any network. You can make payments. You can even subscribe to insurance packages on your Momo. You can subscribe to insurance packages. You can even subscribe to informal pension schemes. So pretty much all these things are needed to ensure that our financial market remains robust. I think we also need looking at how regulators can encourage fintech platforms to extend credits to SME businesses, because SMEs complain generally about lack of access to finance, because they lack the skill, they lack information, they lack credit history that typically traditional banks would ask for, because they are unable to come up with these kind of things. But with the introduction of fintech in this space, it would solve a lot of worries that SMEs generally face in accessing credit. And I think in order for us to achieve this successfully, it's important that we look at how we can have a lot more credit bureaus available, because a fintech would have to run successfully on the back of data, would have to run successfully on the back of available resources. I think the last time I checked, we have just very few credit bureaus available in the system. And so if we want fintechs to also support the extension of credit to SMEs, then we need to look at our credit bureau system. And because information on SMEs is still a bit difficult to acquire. And so with the introduction of more credit bureaus, it becomes a lot more easier, and fintechs can adequately partner with these institutions. I think financial literacy campaign is also important. And most SMEs, individuals, friends in the rural areas have all gotten their fingers bent with their exposures to different business. I think somewhere last month, the Bank of Ghana even came up with a notice indicating that certain loan apps, or how do I call it, loan companies, were not licensed by them. And so I think the moment we put in place a strong financial literacy campaign to educate people on what they need to know, or the kind of systems or participants they deal with, then it becomes a lot more easier. Now, financial literacy campaign would be a lot more important to build the confidence of investors, because if investors or SMEs or businesses have difficulty or are not confident about dealing with a fiscal structure, you walk into a bank, you walk into an institution, and you even walk to an SME or microfinance, and it's a lot difficult for you to trust them. How much more trusting a digital platform? So there's a lot of mind shift work that has to be done. There's also the need to ensure that we educate them on that score. Investor education and protection. This is also another regulatory intervention that we think is very needed and important at this time. And there should be the need to implement financial literacy programs in schools and communities. I say schools because we need to start educating the populace right from infancy. We don't have to be reactive. We don't have to wait for things to happen before we start coming up with training programs or sensitization programs on what has happened. People need to be educated about the risk and potential benefits of the kind of products they invest in. People need to be fully aware of these things. And I think that we have seen a lot of work being done then again by the regulators, but there's a lot more to be done. And this is where bodies and associations like ACI Ghana are also willing to play a leading role, where we can support the driving of financial literacy at every level. I think another issue about the financial literacy has to do with how information dissemination happened during the DDEP. I'm sure most of us got different WhatsApp messages interpreting the DDP, in very funny ways, which obviously had an impact on investor confidence. And so ACI Ghana is also looking to work closely with media houses to ensure that the right information goes out there, to ensure that investors get access to the right information. It's one thing when information gets into the wrong hands, it can be very disastrous or dangerous, So ACI Ghana, together with the regulators, would see how we can obviously drive that area. We also need to establish an ombudsman service or dispute resolution mechanism. I think this would also go a long way, because the question is, if an investor has a concern or has grievances to be addressed about a transaction or an activity he or she undertook on the market, who or she does he go to? And we believe that once we put something like this in place, it will go a long way in boosting the confidence of our investor, especially in times like this where investor confidence is somewhat eroded. Measures or interventions like this would go a long way in boosting the confidence of our investors. And of course, they would believe that they are well protected by the regulators. Capital market development, I think, is also important. We think that introducing tax incentives such as tax incentives will make the capital market a lot attractive for companies who want to issue bonds and other debt instruments. I think a lot of companies tend to resort to the traditional financing option by going for loans from banks, and because when they do the cost benefit analysis, is a lot easier, and even in terms of understanding what the processes entail, we believe that the listing requirements should be a lot simplified, and that is where the work done by GACS would also come in, because GACS comes in to reduce the regulatory requirements for SMEs, and that's where it needs to come in. So introducing incentives such as tax incentives for companies to access the capital markets and general simplification of listing requirements would go a long way in promoting our capital markets. The point about regulatory sandbox has already been spoken about. Ghana, we've already made significant progress in this area, and I think somewhere in February, the Bank of Ghana launched the regulatory sandbox, and they invited banks and participants to all come on the sandbox. But I think a lot of work has to be done in this area by encouraging participation. It is one thing for the sandbox to be created, which is very commendable, but we need to encourage participation. And of course, we can't leave this alone for the regulators. As market participants, as leading market associations, we need to talk about the need to drive innovation. We need to talk about the need to deepen our market. The moment these issues become very topical on our minds, then of course we have institutions or who want to come up with some of these products come on the regulatory sandbox. And we think that this is also another area that needs to be looked at. And I think the Bank of Ghana has already taken a big step in this area, and as market participants, we can only support them. We have other regulatory interventions such as technology and cybersecurity measures. It is important that we enforce robust cybersecurity regulations for financial institutions and fintechs. It is very important that regulations have been put in place. The cybersecurity threats are on the rise, and this obviously has a lot of implication on the risk businesses and financial institutions are facing. what role does the regulator have in this place by ensuring that the right regulations are put in place to ensure that firms and financial institutions are protected. We also look at collaboration between financial institutions and law enforcement agencies. We need to ensure that the right collaboration is put in place. I'll just move lastly to strengthening of regulatory regulations and compliance. I think it's important that there is regular engagement with the market and updating of regulations to address any possible investor gap or market manipulation, because the market is dynamic. Market keeps evolving. Every day, different things happen, and we think that our regulations ought to be adjusted or to be updated regularly so that they are in sync with market development. And of course, when the market grows, it grows for both the regulator, it grows for market participants, and it grows for the economy at large. And so we believe that once regulators are readily updated, and we see a lot of boost in our economic activities. I'm trying to rush through because of the time allotted me. I think it's important that we talk about the need for collaboration and stakeholder engagement, because collaboration between regulators, financial institutions, and industry players is very critical to building a robust and a sustainable financial market, because working together with all these parties would ensure that the regulatory interventions the participants are well informed, effective, and responsive to market dynamics. When we have the regulators, when we have the financial institutions, when we have industry players all come together, we would see that these interventions are well informed, they are effective, and they are responsive to market dynamics. There's no need with having regulations come in and being reactive rather than being proactive. That's why such discussions are there, to ensure that these discussions happen on a regular basis. And the truth is, when we see that all stakeholders collaborate, when we see that all stakeholders come together like we are doing right now to have such discussions, we can collectively address whichever challenges we think the market is facing. We'll be able to clearly identify the opportunities and promote innovations which would benefit the entire financial market. And I think the advocacy for open dialogue is also important by ensuring that we involve all stakeholders in the regulatory process. Regulation, every one of us have a role to play in the regulatory process. And the moment we're all involved, then it enables a range of perspectives to be considered, and we'll end up seeing that the kind of regulations that are designed are well designed and they are well balanced for the growth of our financial markets. And the truth is that by engaging with market participants, both consumers, industry experts, and regulators will be able to better understand the implications of the proposed regulations. And so we implore our regulators to get on this engagement with us more often, with market participants and with stakeholders, professional bodies like ACI Ghana, so that we can bring together diverse opinions, diverse perspectives, and we end up ensuring that the regulations that are being rolled out are well balanced and they are well designed. For me, I think it's important for us to emphasize the role of ACI Ghana and other regulatory bodies in supporting the regulatory of other professional bodies, in supporting the regulatory efforts. And I think that as the voice of financial market practitioners, ACI Ghana we can facilitate constructive dialogue between members. Our membership cuts across banks, broker dealers, insurance companies, fund managers. We have membership across all these areas who represent different fragments and segments of the financial market, who all have concerns that need to be addressed. Now, we believe that as the voice of the market, we as ACI Ghana will be able to facilitate constructive dialogue between all these stakeholders. We believe that we can also provide valuable insights and expertise and industry perspective to regulators during the formulation of all the regulatory interventions. We have outlined a number of interventions that we think can be introduced or have already been introduced, but there's a need to emphasize, there's the need to ensure that these interventions see the light of day. Now, we think that as ACI Ghana, we'll be able to work closely with the regulators. We provide valuable insights. We have expertise which cuts across every aspect of the market and industry perspectives. and we can offer industry perspectives to regulators so that whatever regulations are being designed are well balanced and the implementation ends up working very well. We can also contribute to capacity building. We think that it's also important by organizing training programs, workshops, and seminars, to enhance the knowledge and skill of market participants, because there's no point if regulations are being introduced and the people the regulations are meant for do not understand how to apply it to their day-to-day activities. ACI Ghana is ACI Ghana would also look to do that. And I think the other point which we've spoken about, the other point which has to do with sharing best practices and trends, advocating for fair policies, and of course, ensuring that we channel member feedback to regulators. I think 2 weeks ago, we had an engagement with the Bank of Ghana on the number of concerns that had happened on the market. And this is one way of ensuring that we give feedback to our regulators real time. And this goes a long way in ensuring that the regulations that we see are well designed and well balanced. To sum up our discussion this morning, I think it's worth emphasizing that regulatory interventions are instrumental in closing the gaps in our financial markets. And we believe that further discussions are encouraged or should be encouraged to promote continuous collaboration and innovation. And of course, we think that together with Blackstar, with ACI, with market participants, with the Bank of Ghana, with SEC, with GSC, and all stakeholders, we can together support Ghana's economic prosperity. And this would obviously benefit all stakeholders. Thank you very much. Hello, can you hear?
Yeah, thank you very much, Loris. That's very insightful. This is a thesis paper. Anyway, so on the way forward, the things you mentioned, the financial inclusions actually struck a chord with me, and also the one about mandating banks to offer low-cost savings accounts. That's equally very important. We also have the one that you have to do the schooling and the communities so that we don't have to wait until people are at the university level before we start teaching them financial services and in financial markets, information and all that. So how are you relating with the regulators, and how easily are you, projecting these agenda, the recommendations that you have in here, and see how they will come into fruition?
All right, thank you very much, George. I think it's important that as the voice of financial markets practitioners, we stay close to our regulators and all relevant stakeholders. Now, over the past 2 or 3 months, we've been in active engagement with the Ghana Stock Exchange, SEC, the Bank of Ghana, and we have clearly outlined some of the concerns and issues that market participants have routed through us to them. And I think it's quite refreshing to see how welcoming the regulators are with the concerns that we have put across to them, and their support which they are willing, to give to us, ACI Ghana, and to see how we can collectively build the market. So I think from the engagements we've had so far, they are quite fruitful. And from this discussion, I think it's important that we continue the engagement with the Bank of Ghana and other stakeholders so that these recommendations, these interventions which we are proposing are clearly itemized. Now, it is not something that would end alone with the regulator. This is where we would call on all and sundry, because if you look at our recommendations, we spoke about the fact that ACI Ghana will provide valuable insights. And so when it's time for certain decisions to be made, we call on our members to avail themselves to provide expertise, to share different perspectives from where they sit. We think that when these regulations are being rolled out, we would also need the support of members to also avail themselves to provide trainings to the market and all key causes. I think so far the engagements have been very positive. It's about going back and ensuring that we keep engaging our engaging our regulators, and hopefully we'll see a boost in our financial markets. Thank you.
Thank you. Thank you very much, Lawrence. That was refreshing. All right, so we will reschedule Dr. Forrest to tomorrow since we are having some technical challenges. And we'll give you the exact time as against tomorrow's program. So for now, we have one question for Mr. Simons. So now I think you will shoot.
Mr. Simons, please, are you still on the call?
Please, I'm here.
Great. So you mentioned something about green bonds, and there's a question here for you to explain a bit of the green bond markets and how it's expected to deepen our bond markets.
All right, thank you. Investors are becoming more environment sentiment. They're giving more concern about the environment, about social issues, and about governance. And so investors want to put their money into projects that impact more positively on the environment. We all are seeing the effects of climate change effects. We see more floods in various jurisdictions, more distressing storms and so forth, affecting many countries. We see more of the snow melting away in the polar regions, and so investors have become more concerned about the environment. So they want to put their money into where projects that impact positively on climate, that improve climate, the environment and social issues. So we see green bond and sustainability linked themed instruments being issued, and these instruments are related to projects that impact on the climate. So in that sense, issuers who come out to issue such products have very competitive pricing given them by the investors. And so we put in place the framework to enable corporate institutions come onto the market to issue such bonds or such instruments. So we can have the government come and do a green bond or sustainability linked bond that may be used for maybe some social programs like schools or hospitals and such products like that, or projects that are really climate related. Maybe talk about waste management, or let's say energy related projects. So when such project comes up, investors are able to put their investors who are more concerned about climate will put their funds in there, and they give them, as I said, Nisha said, they give them very competitive pricing. So the framework is available, and we launched it last year in November. And so any issuer that is ready to do that, we even have FSC Ghana, FSC Africa that is ready to fund the initial cost of issuing such security on the market to fund the cost in terms of the initial cost that would take the issuer to do that. And so they are promoting that for them to be able to come up, any corporate institution to come into the market to issue a security that is climate related or environment related. And so these are, once a company or a corporate entity or a government comes up to issue, these are quite different, because that instrument or that security would have to be tagged as green, and it should be on the market and will have its own peculiarities and characteristics. So they are quite a bit separated from the other bonds that are on the market. So it may have its own cost of pricing, and then so it becomes a separate instrument that is also traded on the market. So when we talk about that diversity, we're talking about all sector products, so that they're able to come. If we're able to issue such products on the market, they come onto the market, and investors have their opportunity to invest into such products. So the framework is available. If you go onto our website, Ghana Fixed Income website, it's part of the GIFIN rules that have been approved by the SEC, and you can have access it, and any issuer that wants to come onto the market can contact the Ghana Fixed Income market and have a further discussion.
Thank you very much, Mr. Simmons, for that answer on the green bonds. We have a final remark from Dr. Ebenezer Ashley. So Dr. Ashley, you can unmute and make the final remarks. Dr. Ashley, are you still on the call?
Yes.
Yes.
I hope you can hear me. You can hear
yes.
me?
Yes.
All right. Thank you very much. Yes. I would like to thank Black Star Brokerage for this insightful webinar. Indeed, it is worth participating in this. We've been able to share ideas and information collectively, and that's quite insightful. I would like to respond, not react, respond to one or two recommendations made by the last speaker, which actually relate to happenings within the banking industry. Hello? Hello?
Hear you.
No, okay. Yeah, so there was mention of SMEs struggling to access loans from the banks due to perceived risk. Actually, this statement was true, but the dynamics have fortunately changed now. And so the SMEs have the opportunity to access loans from the banks. Fortunately, the banks have taken proactive measures to secure loans at, I would say, relatively lower rates, some of them. And on the basis of this, organizing the SME clinics and broader financial outreach to educate our traders on how to ensure basic bookkeeping. In some cases, some of the banks are now offering collateral-free loans to our SMEs. I can make mention for people to go and verify and even have that. You go to Absa Bank, now you get a loan for as low as 10% interest charge, which is far below the Ghana reference rate of currently 29.28%. Yes, Absa offers loan for 10% to SMEs, collateral-free. The recommendation to the banks includes the need for us to transform from the armchair lending to the performance-based lending. And this is what the banks are putting into practice. So they will be able to walk the customer through the process, frequent visits to see how the customer is faring, so that the proceeds from the customer's operations will be enough to pay off the loan and also derive profit. So yes, SMEs had risks, but the dynamics are changing now. Some of us refer to this as the days of former President Kufuor, when the banks were visiting traders who sold on tabletops to even invite them for loans. We are revisiting this era now. And so it's an opportunity for my brother, Mr. Buampo, to share this information that yes, the dynamics have slightly changed. The banks are ready to collaborate with the SMEs to accelerate the recovery process of the economy and also put the economy back on the desired growth path. And so that has to do with it. And then the lack of basic financial literacy. Yes, this is also a challenge. But fortunately for us, the banks are transcending the annual financial literacy month to engage in basic interactions with the customers at various levels. GAB is actively involved in this. We ensure that we respond to calls from radio stations in the local languages, Hausa, Twi, that we can speak of, so that the explanations will be given to the basic understanding of our customers. And so the lack of basic financial literacy is gradually giving way to the prevalence of basic financial literacy in our communities, and also for the broader financial market, which is actually dominated by the real sector. Hello.
Yes, you're here. We can hear you.
Okay, thank you.
I hope you are wrapping up.
Okay, yes, about wrapping up.
Sure.
And also the fintech, the fintech innovation, it is not far-fetched. It is not out of place at all. His statement was right on point, and the banks are not oblivious of the valuable contribution of fintechs to the success of the customer service delivery and customer satisfaction. And this, on the basis of this, the collaboration with fintechs now by the banks is higher than it was in some time past. And to share this with all of us, he touched on Kenya being one of the driving forces when it comes to mobile money services. Actually, mobile money service was started in Philippines in 2005. It first came to Africa through Kenya in 2007. It was implemented through the M-Pesa that he mentioned. So Kenya is not just one of the driving force, but then the leading force when it comes to implementation of mobile money services in Africa. Ghana is emulating the example, and the banks have also introduced the Ghana Pay. We're working assiduously to ensure its effective implementation so that the quest for higher financial inclusion wouldn't be a mirage, but then it will be practically manifested in our midst as an economy. And so I wouldn't take much of your time. I will end on this note and once again thank all the participants and also Black Star Brokerage. In fact, you've done a yeoman's job. Thank you very much.
Thank you very much, Dr. Ashley. This is the end of our webinar for today. We've had a couple of speakers come and talk about the lessons we've learned from the DDEP and how we are supposed to move forward. I think what really I took from this was from Mr. Simmons' speech on the fact that we need regulatory policy sync, which would really go a long way to develop the market. So tomorrow we have another program and the flyers will be shared with you. If you still have any questions, you can definitely send it to us and it will be answered for you. So we'll see you tomorrow at 10 a.m. sharp. Thank you and have a nice day.